Good morning, everybody. Welcome to the Flow Show, Tuesday, the 10th of February. And well, fairly steady morning so far. Not a lot going on, but it's going to ease us into the trading day, no doubt. Morning, Kay.
Morning, everybody. Morning, Ryan. How are you doing, mate?
Yeah, all good, all good. Enjoying the weather as usual.
Hey, it's actually dry outside.
Is it?
Yeah, just for 5 minutes.
Oh, yeah.
Go for a walk.
Unbelievable. Anyway, let's not get bogged down in the rain, literally. Let's get cracking. Get a nice early start in. Right, over in China, the PBOC are fixing things lower and lower. So they're allowing dollar China to strengthen more and more. Just looking, we're actually trading down to 691 at the moment. The fixes, I'll find it, gone past it. The fixes have come down to 694, but as you can see, we're against the next area of support. Potential support down here, bit of a level around this 691, so quite an important level. Kay, there's no let up from these guys at the moment, letting it go.
No, I think that call, well, they have done it in the past, but seems like investors have heard the call for the Chinese yuan. They are letting it slip slowly. They want a currency that is stable and stronger. That's potentially going to attract investors, and we have seen over the many how shall I say, trade little battles that China most of the time comes out on the upper hand still right now. So yeah, this I'm not going to stand in front of this move.
No, absolutely. They did put a sort of little warning in
Yeah,
a while back, but they haven't followed it up, and it's continuing to go. So yeah, bit of a big level here, bit of a historical level. This 690, 91 area. If we're breaking now, we could be in for a move all the way down to maybe that 678 level that's down below. So worth keeping an eye on that if you can trade it, of course. The National People's Congress Standing Committee, this is all the powerful big weeks in China, going to hold a meeting 25th, 26th of February, according to Xinhua News. So we might get some bits and pieces out of that one. Over in Japan, one of the things that's unlocked now, we've had the election, is the replacement for probably the second biggest dove at the BOJ, Noguchi. His term is going to be up, and so they're going to look to appoint someone in his place. They hope to have a nominee going forward to Parliament as early as the 25th of February. So it could be a bit of a change going on there, depending on who comes in. Finance Minister Katayama says that they're aiming to pass the fiscal year 2026 budget and tax reform as soon as possible. They're also looking at non-tax revenues to fund a sales tax cut. We're seeing bond yields in Japan dropping post-election. This could be significant. Kay's mentioned it in our room this morning that perhaps, well, it might just be a bit of after-election squaring up or whatever, but if we do see a significant top form in here, we could potentially see some of the big whales, big buyers coming into the market now. There was prior stories of some of the big banks stepping back in. The fiscal year would be potentially important time for some of the whales like the GPIF to start making their lists, if you like, as to what they're going to invest in for the next fiscal year. But Kay, something, we're not falling off a cliff here, but it stopped going up, I think, is the first note we need to make.
Yeah, absolutely, and we're still early doors in the honeymoon. Always have to be a bit cautious because we have seen such kind of moves in the past and then to be reversed. But there is something, the correlation, at least since the election, about higher Nikkei, lower yen has broken, right, for now, and seeing a lot of comments about inflows into Japanese assets. Also, as you already mentioned, JGB market very quiet, very subdued. Even JGB sticking up a little bit today with the yields coming off a little. So no stress about immediate funding issues for whatever fiscal plans. Takaichi and Katayama seem to have a very good cooperation. Those two are trying to put in place. So um, it smells like a Japanese back kind of trade. Again, we need to be a bit careful, but that correlation breaking down is it would be one of the signals that maybe I need to revise my yen view a little bit. I thought that we would have one more leg of fiscal looseness trading, meaning JGB is coming down, yields ticking up a little bit. Yes, investment into the Nikkei, okay, but then a bit of a softer yen incoming, and then a reversal once we get the data, she puts everything in place. But it does seem that the market is buying Takaichi, right? And so if this Japan is back would have legs, we need to be a bit careful with what may happen on certain carry trades, and the correlation will further break down. Yen may actually strengthen when Nikkei continues to go up, when the JGBs continue to perform relatively well, and if we would add on top, of course, um, the changing plans, investment plans by the Japanese whales on top of international investors, that's going to put then a serious bit under the yen. So timing wise, I'm not out of it yet, but I can understand what is happening right now.
Yeah, I mean it's easy to look at the situation now and make an assessment. We have political stability in Japan,
Mm,
and that's one thing the markets always want from a country is political stability, and that's what it's got. Strong mandate over there, and again, if you compare like for like, compare that to the UK, where the Labour Party had a strong majority, i.e., political stability, but none of their fiscal measures have any effect to boost growth whatsoever. Japan may have, or Takaichi may want to throw a big kitchen sink at it, but these are measures that are designed to boost growth, consumption, and the like. And so the market is probably going to give her a bit of rope on this one. As much as the fiscal easing is equals yen weakness on paper, if the measures work, and this is something I said right from the very start, if the measures work, then you're going to get good growth in Japan. You're going to get the Bank of Japan hiking, a good economy, and that's positive for the yen. But as always, it's when does that happen? So I think I think right now the market's happy she's got political stability and decent policies. Now they need to work. So I'm in the same boat with you. I think short term, at the very least, yen pair should probably be a rally sell,
yeah.
at least from the Japanese side, irrespective of what
Mm.
happens in the US and everywhere else.
It's go would be a very big change in how the market trades, because if correlations start to reverse, that means you buy Japanese assets, it's good for the yen instead of having
Yeah,
the opposite effect right now. And on top, the Bank of Japan, which should actually, yeah, still continue maybe to hike once more, reducing further interest rate differentials. And there's this one thing, we there's been that discussion about this using FX reserves, as the market called it, to fund the tax cuts. But I've read something interesting, is that they actually made on the foreign exchange fund special account, where the FX reserves are and other Japanese money is parked. They actually made 5 trillion yen profit last year, which would cover the cost for at least a year of tax cuts. That's maybe something just to keep an eye on as well, because it wouldn't mean selling FX reserves to buy yen, but just using the profits of it.
Yeah, and let's not to forget the Bank of Japan selling their ETF holdings, which I assume are sitting nicely in profit given the levels
Yeah,
of the Nikkei at the moment.
yeah, yeah,
Although
yeah, yeah, yeah.
that's a 112-year exit plan. they
Yeah,
they could step it up a little bit, but that profits is going back into the government.
yeah. And the more we talk about it, the more I'm starting to have a feeling I should be long yen.
I might have a little nibble if this 155 breaks, but yeah,
Yeah.
I definitely think
It is. It is. It's looking like really because that's the thing in Japan. We've seen that since October. There hasn't been anything else really apart from the intervention scares, etc. To that really held back dollar and yen crosses. But if this whole thing starts to reverse, if the investors start to buy, we could have months of yen strength as well.
yeah, yeah, and it'll be funny because we were saying that Katayama and Co. that they hadn't got any sort of fundamentals backing them up for fighting against yen weakness, and now they've got a stonking majority in Parliament, and
Hmm.
that might be the reason why their verbal intervention has worked, and they've got a bit of backing to see the yen
Yeah,
strengthen some. But
yeah. And
yeah,
there would be nothing better than investors buying the story.
yeah, exactly.
That's really and that's finally what makes currencies and assets move. It's the investors' confidence. We may call data whatever we like, but I mean the investors' confidence in an economy and in a country is what really drives markets. And if they start to buy yen, or at least already unwind every yen short that they have on the books, it can drive markets for weeks, if not months, right?
Yeah, exactly. 100 yen, here we come. Probably by April. Who knows? We shall see. Right. Anyway, moving on from that lot. Norway, their CPI data came out today. Let's get the old calendar up for this morning. Where are we? Norway, Norway, where are you? Hotter on the CPI. This year-to-date number, 3.4% versus 3.1% previously. The main January headline number coming in at 3.6% versus a prior 3.2%. Now, the Norges still expect to cut rates, but they have acknowledged that inflation remains above target and they still need some restriction there. And this sort of data will keep them firmly sitting on their hands. So another cut is not a done deal. I dare say we could be heading into an RBA type situation with these guys if it keeps climbing up. So one to monitor. Anything to note in the knock on those numbers?
Yeah, well, the Norwegian krone has strengthened a bit again. We're trading at the lows in Euro Norway. We are on the approach of pretty big support that I've noted, and around 944-ish, give and take a big figure in dollar Norway. In the dollar Norway, a bit of a trend line from lows a while back.
Fib there as
And
well.
sorry.
We got the fib there as well, to 61.8.
And exactly that one, and that's a bit of a big level there. It's been obviously supported by better prices on the Brent crude, gas probably as well. I haven't looked at it, but yeah, Norwegian kroner is still a currency to cherish, I think, right now, and wouldn't be surprised if we see deep buyers in the Noki still for a while. And yeah, yeah, maybe you're making a really good comparison with the RBA. Norges Bank heads are mm, most of them walk in the middle of the Hawks and Dove park, but they will not they will be very pragmatic about things. So if that inflation is too sticky and the economic data are not too bad, they will put the brakes on any rate cut expectations, and they are. Let's face it, Norwegian kroner is a relatively high yielder at 4%.
Yeah. Oh, when is do we have their upcoming purchases thing? Is that February or was that November? I can't remember. When do they change their purchase plans and selling plans and whatever? for the currency. Is that February? Are you there? Oh, you might have gone and answered the door.
No, I'm still here. I'll do a quick check on what, because they produce it every month, huh?
Yeah.
Yeah, I should be answering the door very soon, but let me just
yeah, I'll leave that
foreign exchange transactions in February. Here we go. February, they are actually buying Norwegian kroner to the tenor of 726 million a day. So net amount 600 million NOK a day. So that's about, they're selling about 50 million euro NOK a day, or equivalent currencies.
Okay, so they'll be
that's going to help. That's helping Norwegian kroner, right?
Yeah. Adding a bit of a tailwind to those. Right, moving on. Right, the political stuff in the UK, we can probably forget about it now for a short while anyway, because it was a bit of a mess yesterday, a bit of a knife edge for Mr. Starmer, the PM. He's come through it. His cabinet finally started dribbling out with the endorsements. Not exactly a strong showing. None of them were out first thing in the morning, but after various meetings, they all sort of, came out the woodwork. The pound didn't really react until we got Angela Rayner and Wes Streeting, who are two MPs in his cabinet. Well, Rayner was the one that she had to resign over dodgy tax affairs. Streeting is the one who is basically a mentor. His mentor was Peter Mandelson. But they are the two of the potential candidates who would throw their hat in their ring to challenge Starmer. So when they came out backing him, we saw yields coming down and the pound getting a bit of a bid on. So he's over the worst of it. He's had the backing from his cabinet, backbenches, and a lot of his own party. He's still on thin ice. It's not going to take much more to put him back in the firing line again. But for now, the market's probably going to push it to the back of their mind until the next blow up happens. So we're over that hump for now as far as the quid's concerned. BOE's man was having a waffle yesterday, still blaming Brexit being a drag on the economy. I don't know how people are still blaming Brexit this long after it, 10 years after it, because you could blame it if Europe was doing gangbusters in growth and everything else, but they're just as weak as we are. So maybe Brexit's to blame for them as well. But anyway, she's still going backwards for that. ECB's Lagarde says remain focused on price stability. We expect inflation to stabilise sustainably at our 2% target. ECB's Kestrel Casimir, one of the old hawks who's seems lost a few of his feathers, says the baseline is staying on hold for now, but the outlook is uncertain and fragile. Says it would take a major departure from baseline scenario for him to consider changing policy. ECB's Nagel says current interest rate level is appropriate. Bank of France Governor Victory Lap Villeroy, as I call him, is going to be stepping down for personal reasons. He's going to off to a foundation supporting vulnerable youth and families. So a well-meaning cause there, but he's given advance notice for that so they can get someone else into play. A couple of names already been touted. Over in the US, the New York Fed one-year inflation expectations data or survey came out showing that down at 3.09% from 3.42%. 3 and 5 year inflation expectations stay unchanged at 3%. Fed's Mirren says monetary policy should be attuned to the business cycle, which is potentially something I can agree with. In fact, that's how things pretty much used to work. Because business cycles were economic cycles. So he's not really saying anything new, but maybe he's right in that we've had a departure from that regarding monetary policy. Now, we had a bit of shenanigans yesterday, a bit of fun and games, headline reporting from that mob that begin with Bloom and end in Berg, because they put out a headline from Hassett saying that we should expect slightly lower job numbers, and lower numbers shouldn't trigger panic. Now, coming 2 days before the NFP, the way that headline was written, you could quite rightly assume that he's talking about Wednesday's numbers, which saw the market have a little bit of a blip over. However, when you actually read the story, he said that US job gains could be lower in the coming months due to slower labour force growth and higher productivity, which is pretty much something he said for quite some time. So he was not talking about Wednesday, he's talking just generally. But as I say, you know, you're not going to move markets if you put out those sort of headlines, particularly if some of your staff get paid bonuses if they get to move markets. But anyway, enough on that. So Hassie out with some comments. They were spun a bit by the press, got a market move, but they weren't as incendiary as they were made out to be. Trump, on the other hand, he's not piling much pressure onto his new Fed pick, Kevin Walsh. He says the UK can grow at 15%, if not more, if Walsh does the job he's capable of. He was also asked if the power probe is worth holding up the Walsh nomination. He says he don't know if that can happen, but if it happens, it happens. Also, a bit of a wild comment out the blue. Trump says he will start negotiations with Canada immediately on bilateral issues, saying tariffs Canada charges on dairy products is unacceptable. So 1 minute he's not going to speak to Canada for a long time, and now he wants to speak to them straight away. So another bit of flopping there. Kay, that Canada stuff, it's not... can we put it in the USMCA basket, or is this just separate stuff, do you think? That
put it in whatever basket you want. It's like one day you go shopping at Aldi, and the next day at Lidl, and the next day at Tesco's, you know. But he also threatened to close the bridge between Detroit and Canada, right? So, I mean, there's a separate story going on between Canada and the US, and then the overall USMCA thing. It's going to come into the USMCA as well, because they have to renegotiate it, because he said he brought it on the table as well. Mexico is already working on it, as we know. But there is a different argument between Canada and the US, and that's going to be still a story to continue, because it's not only directed at Canada, which was at the start, but then Carney going over to China wasn't for his liking either. Oh, there we go. I have the delivery, Ryan.
Yep, go ahead, mate. Go ahead. So yeah, this Canada thing, I mean, he's been negotiating with Mexico on different stuff. He's been negotiating with Canada on different stuff. Whether it all get rolled into the USMCA bits and bobs later on is an open question. But anyway, we should expect some headlines of the US and Canada on those negotiations anyway, and that China stuff is going to come up as well. Simon just talking about streeting, saying he created the coup. Yeah, it may be, he may have done, but the issue. Sorry, just to go back to this Starmer stuff. The issue for both Rayner and Streeting is they've both got active skeletons in the closet at the moment. Rayner's facing that tax probe, and obviously Streeting with that link to Mandelson. He actually put out some private WhatsApp messages with Mandelson as well. So he's trying to clear the air and move away from that saga. But yeah, as I said, it's not over. But in Starmer's case, we're over the crunch point for now until it kicks on. Right, let's have a quick look what we got coming up today while Kay's answering the door. We've got retail sales coming out. We do have this weekly ADP thing coming out, which no one actually really pays much attention to. So the big thing is going to be retail sales. They're expected in at 0.4%. These are for December. Now we saw that borrowing numbers, consumer credit numbers, as I reported yesterday from Friday, was pretty hot, 24 odd billion. So it might stand to reason that we could get a decent set of retail sales data from the US if that translates over. So I think maybe the risk is we see a bit of a better number than 0.4%. Obviously, keep an eye on the core metrics, ex gas and autos, control group, i.e. core sales and the like. So could be in for a bit of better numbers here as well. There's a control group. They've got 2 numbers here for core sales. So keep an eye on those in particular. We do have some import-export price numbers as well, and some Q4 wage data, benefit data. Just keep half an eye on those just to get an underlying view of the theme of things going over there. Later on, we get business inventories, which have been trading around 0.2% for God knows how long now. So not much change there, but still positive inventory numbers. Still positive for the economy. A couple of Fed heads speaking later, and we kick off the auctions for this week with a 3-year note sale later on. So a bit of the data to get us going. Kay is back.
Yeah.
I was just saying, Kay, this given those consumer credit numbers on Friday for December, that big jump, maybe we need to set our sights a bit higher for retail sales today.
Yeah, very possibly, Ryan. That's within the possibilities. It's going to be an interesting, obviously, 24 hours of US data, right? Retail sales not to be frowned upon because it's consumer data, which is always very important, and then tomorrow, obviously, the big one. But I think over the next 24 hours, yeah, from now on, maybe 26 hours, we should know after the move that we have seen so far in the dollar. I think we should actually know what's going to be the play for the rest of the week, right?
Yeah, absolutely, and yeah, it might give us an opportunity to sell dollar yen if we get some decent values over that.
Yeah, that would be. And I'm actually thinking, and I think it's Dimi who asked the question about what currency would you trade against yen strength. Well, Dimitri, I just started to think about it really this morning. So sterling is one that you could do, but if Starmer stays on until at least May, is the market not already a bit short sterling, and as the sterling further to recover? I don't know really. What other currencies could be potentially weaker?
I think dollar yen looks the cleanest. I mean,
yeah, the cleanest is dollar yen. Yeah, and if you think
Aussie yen, given what the Aussie's doing at the moment,
yeah, exactly. Out of both Aussie and Kiwi, I would actually do Kiwi because as well it's a lower interest rate, so you're not going to pay as much on the funding. And if you think, but I mean, looking at the Canada is not really weakening that much, right? That could be a candidate if there's more stress between the US and Canada, but the effect has been waning as well. Yeah, I think you just keep it simple. And yeah, dollar yen is probably going to be the cleanest trade, right? Euro is still a bit bid. Euro could reverse relatively quickly as well if we get again anemic data as we have been seeing basically of late, and the Germans need to revise their growth forecast once more to the downside. That could be a candidate, maybe euro yen, because you also have like slightly lower interest rates than dollar yen, for instance. But it's a thought process that we still need to go through, because I'm just thinking about, or we were just thinking and talking about it. It's not something that maybe this thing still reverse, and we still go for a test of 160 when she starts to talk about how much they are going to spend. Although some of the plans were already known from October, November. Yeah, I mean, it's still in the early stages as well, as we've been saying. So just be a bit careful what you do, and perhaps Ryan in that context, Ryan is probably right. I mean, the cleanest trade is dollar yen.
Yeah, I think we should make clear. I don't think either of us are saying, shut your eyes, sell yen pairs and see what happens in 6 months. We're just talking right now, and if we haven't got a trend of yen strength or anything close to one, yen weakness is still really the side. You look at these charts, even this one, 2020, you can see that we're still in this trend of yen weakness. So I'm personally just talking from the short term. I'm talking trading the data maybe today, the next couple of days, until we see signs that maybe something is really turning for the yen, and then that'll be the time to take a longer term position. So just be mindful that we're talking short term here in at least at the start. Just trading this week, if anything, not the next 6 months just yet. Right, where shall we go from here? So, well, I'll have a quick look at dollar yen, because we had hit some interesting levels. If I do go onto a cleaner chart, now we had this where we've had all this volatility and we've carved through the levels, but we've then since started respecting some of these levels a bit more. If you look at 157, the break under, we started to respect it. We've come down. We just stumbling against this 155. We obviously know about the 152 that happened after this volatility. So these big levels that I've had on my chart for forever, they're just starting to come into play again. Doesn't mean they're going to hold, but it means that now we're over these big risk events and the volatility. These are the levels you can think about. Something's going to happen here. We're either going to bounce from it or we're going to break it. And if we're breaking it and find resistance, then we might see a similar move to this. And then you've got another couple hundred pips on your hands. So always have these big levels just somewhere on the chart just to keep an eye on. Sometimes they don't work because of the volatility. And then when the volatility ebbs, then they start coming into play again. Shorter term, yeah, we got a few levels underneath this one. 54, 45, 50. If we go and break it, it was a pretty significant bottom twice down here, and we messed around with it again and then found a bit of support into it back in early this month. So if we break there, you're going to see these small intermediate levels. Same on the top side. We broke through this 70s area, just finding a bit of resistance as we crept up to it. Same thing, 156 up to here. So all these levels, they're getting broken and then they're being respected when they're retested. So that tells you what way this market is potentially going or which way the bias is for the moment.
Do you have Ryan? Do you have the cloud on your daily? Because I mean, it's been pretty interesting there as well. To zoom in on your daily.
There we go.
The bottom is at 154.70. If that breaks, then we may accelerate a bit.
Yeah, I think I might eye 155 break. I don't know. I wish I kept my option now, obviously, but
yeah, but I mean, but we have to look at the price action, right? I mean, the price action tells us that the market is not selling yen on the back of the election, so it's always the guide, and if the market doesn't sell yen, it can get a little bit interesting. It's like when the market sells sterling. I mean, it's selling sterling is not a strategy for the market; it's a hobby. But if it reverses, and then it's where you get the bigger moves all of a sudden.
Yeah, and it's interesting. Look where the day's top of the cloud is.
Exactly.
Right on the height of the day. So yeah, it's going to be very interesting, this one, how it goes moving forward. The euro, mate, which trying to have a little build above this 119 area. Let's just take the cloud off of that. Have we got our eyes set on 120 again, or has it got a bit of work to do?
It's still got work to do, because for now, what we tagged was the high again that we had in September 2025, and it's going to have a little bit of work to do. What I noted this morning is that all those little dips that we had towards 119, just below in Asia, they've all still been bought, maybe telling us that there's still a few lazy bids around there. I think 118.90 is the nearest one to watch if it goes back down below we can see a bit of a lower print there on the, and it's probably going to have to wait for the data to tell us. But if you get back above that 119.20 and hold it, we're probably going to have a look at 120 again. Yeah. I've reduced what I had. I took most of this move in euro dollar and Aussie dollar, but I've reduced positions just because of the levels and waiting for the US data, because that's also what we've been saying in the past. You can sell dollars whatever you like, and yes, the sell dollar trade, but then if data continue to defy the laws of gravity, we may see nasty snapbacks as well.
Yeah, yeah. I think if we do get up to 120, it's gonna be really important.
Yeah,
What
very.
happens up there? It's, there's a possibility we do something like this, and if you find 120 a bit of a level again, that has the prospect of setting up quite a significant double top.
Mm,
Then you could get a move down, at least back down to here,
mm.
1780s or something like that. If we get something like that, alternatively, we go and break 120. We can't quite get up to that high, and we make a high there and do that. So it's going to be interesting watching. But if we get above 120, you're going to need to see it holding like we're doing at 119. If you get that, then we're probably off to the races.
Yeah, and
Similar to what we got here.
it is a possibility that I'm taking into account, is that with all the things that's going on geopoles, etc., etc. However you may call it, if 120 goes, yeah, it could actually get some legs, and then I'm thinking about maybe 2021 levels, somewhere up at around 22, 123 or 3. But yeah, I mean, one step at a time, as always.
Yeah, and I think you've got to watch this carefully today for the data, because if it's good US data, and we break 119, watch the reaction. Okay, if we dip down, if we get back quickly above that 119 after good US data, we're going to be going higher.
Mm.
So yeah, it's going to be interesting. But also, we've seen the dollar flip around. Last 2 weeks, it's been crap, and then it has a good moment, and then today it's looking a bit crappier again. Right, so looking at the clock, mate. I'm going to launch it over.
Yes, thank you. Let's look at what's happening and we already spoke about that. Whoops, I'm not sharing. Already spoke about the euro, but Aussie is also at a very interesting level. We are tapping again this 28th of January high and held back again. It's very interesting. Just going into those US data. It's a bit your 119.20 on the euro dollar. You can compare it to that number as well. Aussie has been doing quite okay. Aussie has been doing good on the cross side of things as well. It's been helped, as we already mentioned many times. Hawkish RBA, sticky inflation, better jobs report. This and risk markets are doing still pretty good. I mean, if you look at the equities at least. So there's still a lot going for the Aussie right now, but we need to respect those levels. So as what I said, I've reduced the position, but if we start to break above 70.95, give and take 71 the figure, we could have a quick look up to 71. It's it's how shall I say? Um, it could actually go up to 72 if the sell dollar trade continues and we have broken significant levels. I need to clean this one up, but it's still it's still in the zone where things could actually turn around. But for the time being, I would say, looking at the Aussie, if we don't get a snapback, a real snapback in the dollar, it could actually continue to push through levels and look at where that 71.5 is around. It's around those highs as well that we've seen all the way back in 2022. So that, if you look at back at the shorter term, is also your extension level here if we start to break above 70.95. So that is really the level that we need to look at, but also note that we stopped there. So I mean, this is an important level on the Aussie. Okay, Kiwi. Yeah, it's going, but yeah, it's still not tackling those or not made it back to the late Jan highs. It's still running slower than what the Aussie may do. And then thinking back at what Dimi was asking about the yen pairs, if ever the trade is to buy yen, maybe the Kiwi is one of the candidates also because of the lower interest rates, right? You're not going to pay too much away. I just want to show what I was talking about on the dollar Norway. We had this last week spike back up to resistance level here, which got sold, and then we have the sticky. Then the dollar got sold. Then we have the sticky inflation, and this is what I'm looking at on as a trend line. This I need to go into the weekly even. This comes all the way back from 2013, one touch, two touch, three touch, okay? And that's also coming in around 944, 945, okay? So this is really going to be a big level on the dollar Norway. 61.8 of the 2021, 2025 rally. That's already a pretty decent level on its own, and then you add that trend line to it over here. This is actually no, I'm lying. The trend line, the long-term trend line has already broken. The shorter-term trend line, sorry, comes in at around 943, 944. So, but it's still a big level, and it's also not too far from that low that we saw here, which was another springboard to go higher back in 2022. So it is a kind of a big level there. All right. Euro Norway is trading also on lows, and I need to refresh my charts, but this is looking a bit vulnerable as well because we are getting through the 88.6 here, and we may be on our way to 11.25, which was also a low here. So Norwegian krone still doing pretty okay. S&P. Just a quick one on the S&P, okay? I know that Blake is also looking at this one, 69.85. That's the gateway to get back up to those prior highs of just above 7K. But watch out, if ever that goes, then we still need to break above 70.30, which is the top end of the trend line. But I guess a move back above 7K will look a bit perhaps explosive for a move up to near 71. If in turn we fail, very short term, 69.5, but then keep an eye on what's happening here. That high, that low, somewhere 68.90, 69.05. This I think is going to be very interesting if we get a failure for what's happening on the S&P. Okay, also look here, look here. That's going to be your short term at least level to closely monitor if we get setbacks from those levels. Gold and silver, nothing really special to mention right now, just for one day, 55,000, sorry, to 5,100. That's the zone. Break either side, you will get probably another at least 50 to $100 on the top side, or at least 60, $70 to the downside. But right here and now, 5,100. I'm not seeing anything that is pushing me to her position. Silver, pretty interesting that we held just around that 84 level. We capped just around that 84 level. We are trading around 82. So 84 on the short term, and then I think 86 is going to be a bit of a hurdle here. If it manages to retake that hurdle, then we are going to probably have a bigger move to the top side again, to 90 and above. In the meantime, I would say perhaps a bit more of sideways activity. And we Euro Swiss versus dollar Swiss. Joao, I think both are not looking fresh at all. Euro Swiss is yet on another back to another fresh low. It's just coming close to that trend line. But how many times have we said that that it's close to a trend line? I don't know why. Really, Swiss is that strong, but I really don't feel like catching a knife. And dollar Swiss is a little bit still above those prior highs. But if you look at it, it's not looking too fresh either, right? This still finds rally sellers, it seems, but yeah, you could argue that we are not yet retesting those lows. But do you really want to be long in such a move again? I don't know. I think Swiss is defying the census and defying whatever is reasonable. Still a parking space for a lot of money, I think. Sorry. Yeah, still a parking space for a lot of whatever money that may flow. And I don't know how to really trade it right now. Back over to you, Ryan. Yeah, if you want to look at the cable. I don't know.
Yeah, thank you very much, mate. Well, first thing I want to look at, I think this is going to please the Americans. What you were talking about, Aussie dollar. I think we've got a new indicator, a new formation showing the old wow formation.
Ah,
The old Yanks.
okay, but you need to add za because I mean, if you want to please really Americans, you say wowza.
Okay, then well, we'll squeeze it in at the end. Wowza. There we go. Cable. All right, quick look at cable, Ali. I've got this level 3670s, which is one of these historical ones. You can see we turn around it quite often. We are moving. Let's give it an old epoxy pencil. We are moving below it at the moment. We've got this sort of, we call it a safety net, 136.50s, 60s. But really, it's you've got to probably look down at 136.20s as your next level down here. Let's chuck a quick line in there. Where am I looking? Round about there. Obviously, round about 136, the figure. 137 up top is resistance again. So it's pretty tight at the moment. As I said, the political risk is probably lessened now. So we're going to be back to, or more back to trading what's going on in the dollar regarding this one potentially. So just keep an eye. If we're breaking down here though, then we might be moving down. And then obviously you got to keep your eye on euro sterling, which is still staying pretty lofty, banging ahead again on this 87.20 today. We did have this move through the last couple of days or yesterday and all the political mess. If we can't get through here again, then maybe we're going to see this pulling back, but it didn't pull back too far yesterday. But this is still the crunch level, 87.20, if you want to go anywhere high up from that point. And on that note, we should call it, yeah, Zhao, maybe a what the fuck indicator. I'll patent that one as well. Anyway, thank you very much for coming to the Flow Show. Wish you a great day ahead. We'll see you later on Face. If not, we'll see you here tomorrow. Have a great day.